Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing and rejecting to the upside a quite strong historical support and demand area. From here, in fact, all these previous rejections to the upside have been created. Some of them were really big rejections to the upside. And what we can see is that at the moment the market is testing right now the exact same zone, has already started rejecting it to the upside. So there is definitely the possibility to see much more bullish price action away from the zone and for the market to continue higher. So from a monthly standpoint, everything seems quite bullish. Now, we can also notice if we zoom in into the most recent price action that here we're having the creation of this inverted head and shoulders with the left shoulder here, head here, and right shoulder here. And we can also notice that from a pattern standpoint, we have a clear impulse and correction. And after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg, which shows us how we have the 0.618 and 0.786 Fibonacci retracements lining up exactly with this previous level of support, therefore creating a confluence of support inside of this zone, from which there is definitely the possibility of seeing more bullish price action created away from this level. Because inside of this area, since it is a confluence of support, there is increased probability of getting institutional longing. And when you see institutional longing, that increases the probabilities of getting the continuation to the upside at that point, completing this inverted head and shoulders. And we will be speaking about institutional longing later on in just a few minutes when we move to the order flow. For now, let's drop down on the weekly time frame and see what we have from a technical perspective here on the weekly. Well, from a weekly perspective, the structure is very clear. We can notice how this area was acting as previous resistance here, then the market broke it to the upside. And what we know is that previous resistance, once it is broken to the upside, becomes support. And the market respected its level as support here, again respected it as support, again here respected it as support. Then we had the break below the zone and then the break back above. So this previous support was turned against support here. The market tested the level and started rejecting it to the upside. So in a situation like this, there is definitely the possibility of seeing more bullish price action being created away from this level. Let's drop down on the daily time frame and see what we have. Now, from a daily perspective, the situation is quite clear. I did speak about EURUSD quite a few times in the past. I spoke about it after the market created this impulse and correction. From here, I explained all the reasons for which we could expect this push higher. Then we had the creation of this M pattern. From here, I explained all the reasons for which we could expect the continuation to the upside. And by the way, I will link in description those previous analysis, so you can go and check them out for a more free education. But at the moment, what do we have and what kind of structure the market has been creating? Well, before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing. And let's check the data precisely for the euro. Now, the first thing to keep in mind is that if we're looking at the data for the euro, already we're looking at EURUSD because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, net positions have been massively increased. We went from having minus 9.9k net positions all the way up to having plus 57.5k net positions. So institutions have been moving aggressively back to the bullish side for EURUSD, increasing their longs and decreasing their shorts. We can see, in fact, how here, when we had the negative net positioning, we had 177K shorts from an institutional perspective compared to only 167K longs. Now we have 184K longs compared to only 127K shorts, so the complete opposite. And we can also notice that just with the last report, we had an extra 2,000 longs added and 14,000 shorts closed from an institutional perspective, therefore making EURUSD even stronger. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now, back to the analysis. Well, here on the daily, the important level that the market is currently facing is this structured zone here. This was previous resistance from which all these rejections to the downside were created, which until the market will remain below it from a daily closing perspective is still resistance, so can still easily be rejected to the downside. So only if the market manages to break above this zone, only at that point this previous resistance would become support. So only if the market breaks above the zone at that point on the retest of that previous resistance turns support, that is where, in my opinion, there is a high probability of getting more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this area. So if the market creates this break and retest, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, at that point, I definitely wouldn't be surprised if we get a potential rejection to the upside away from this level. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it.
If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.